Good afternoon, guys. I've just spent 3 days at Money 2020 in Amsterdam, which was FinTech Mania. It was a proper circus. We did a whole bunch of funnels. We did We did a whole bunch of interviews. We did a whole bunch of panel discussions. It was good fun, but it was a bit intense. So I'm quite nice to be here and sit down in a more relaxed environment. Cool. So we got 5 amazing guests on our panel. From left to right, we got Remco Veenenberg, who's the international sales evangelist at W.UP. We've got good old Mr. Verdon, who's the co-founder and CEO at Railsbank. We've got Otto, who you just heard from, the innovation lead at Kasbank. We've got Menno, the head of business and customer development at Moneyou. And to my left, we've got Danielle, the co-founder and CEO at Tink. Just by way of introduction, I'm Tijssen. I head up the consulting business at 11FS. I think a lot of you will be familiar with 11FS and what it is that we do. Some of you might know us from FinTech Insider, the #1 business podcast that we run in about 150 different countries. So if you haven't subscribed to FinTech Insider, please make sure you do. In the next 45 minutes or so, and we'll leave some questions towards the end. So in the next 45 minutes or so, we'll talk about current FinTech opportunities for incumbent banks to become better banks. So there's a lot of cool stuff happening in FinTech at the moment. There's a lot of hype as well. And you heard the guys talk about some of the cool stuff that they're doing. You heard from some of the other guys later in the afternoon as well. But how do you all make sense of all this stuff that's happening, and where do you actually start? And as a big financial institution, you see all these cool startups doing lots of cool things, and you want to do some of that as well. And you know that as a bank, you have to become more innovative. You have to change your business model, because traditional finance, as some of the guys were saying earlier, is massively changing and is rapidly changing as well. So how do you do some of that? So in this session, we'll focus on some of the opportunities that FinTech really brings, both to small players as well as some of the larger players. Now, I speak to a lot of senior execs and lots of heads of innovation, and quite often they say, well, I need a bit of AI, I need a bit of blockchain, I need a bit of this. And what's your view on that, guys? How do you make sense of some of the noise that we're seeing in the industry?
Since I have a mic, then I can. But I think that when we started the consumer application in 2013, we didn't have any revenue model, and we then went back to just focus on delivering customer value. And I think that was our guiding north for some years, and the bet was essentially that we eventually we'd be able to monetize it. As long as customers were happy, as long as they come back, and that they were in sizable numbers, then we kept on doing what we were doing. And I think that is probably something for the banks to use.
What about you, Menno?
Yeah, so I can see the difference quite well now, because what we learned from fintechs, they really focus on a specific need or pain, and really want to improve that experience for the customer. And often, as a bigger corporate, your moonshot, if I may say it, is really to keep that company up and running or expand. And then you deep dive, of course, also later on in customer needs, but it's like derived from this corporate existence. And what I really love about startups and fintechs we've seen is that they have this pure focus. And like I just presented, we try to put that also in front, put the customer in front.
Yeah, and your question was about the technologies. Of course, the technologies enables us to think of innovation, but it's never the objective itself. The technology can only you can use the technology to come further, but it's not only using the technology as is. Yeah.
So at 11FS, we often talk about digital banking is only 1% finished. And to me, that's a bit of a mindset. It doesn't mean that digital is only 1% done, because banks have spent about 250 billion in the past 20 years or so investing in digital technologies. But the way that I look at it is there's a lot of lipstick that has been applied to a lot of pigs. So if you look at how banks have approached digital transformation, it's effectively, you're still looking at traditional analog products that are being distributed through traditional digital channels. So you're not really seeing those intelligent services that some of the guys were talking about earlier. Nigel, for you at Railsbank, I mean, you guys are doing some cool stuff as well. What's your view on some of this?
I'll take a sort of step back on what the basics of banking is selling a current account. And a current account is a completely undifferentiated product and hasn't been for years and years and years and years. So I think coming back to what are the opportunities offered by technology, it comes down to changing the economics and changing the way of engagement with customer. And using technology, as I totally agree, is an enabler, and that is all. If you look at what's the G10 cost of acquisition cost for per customer, it's around $350, lifetime value $250. So basic banking and in the retail world, ex-lending doesn't actually make any money. That's a loss-making business. So the real opportunity that I think a lot of the FinTech guys really focus on, and there's a cynic over there. My family's been in banking since the 1850s and co-founded what's called ANZ Bank today. And the real opportunity is how to engage customers at a micro level, which FinTechs do extremely well. So they really understand customer. It is all about customer. Then how can you acquire that customer at something about $10 instead of $350? So you can make the economics work for retail banking. It's been a problem for the past 20 years in retail banking. Those are the real areas of where technology and FinTech can enlighten the banking world at the moment.
So this point about starting with the customer, I couldn't agree more, and obviously super important. But then, if you ask customers, what do you think of your bank? Like most customers will say, well, it's okay. Like, if you don't ask them, so what do you think of their digital offering? They'll say, well, my bank is an app. It does banky stuff. But then when you focus on like real customer jobs to be done, like managing everyday finances, et cetera, you get completely different responses. So how do you guys tackle some of that at Railsbank?
Again, we don't deal with retail. We're just wholesalers. But the general, you mentioned the word jobs to be done as one of the best methods for understanding what do people want to do. Because Steve Jobs never asked people, do you want an iPad? And he is a world-leading piece of kit that was developed. So there is a lot of confusion about when you do engage with customers. You engage with them asking what they want, which is it's a useful thing to do once you've given them a product. So designing new products, new ways of engaging is very much about how can I help your financial life? How can I help your day-to-day? And one of the things is lots of apps being developed and banking apps that have a digital channel. They don't actually help the financial life of the individual. If you look in China, how people's life is living on WeChat and etc., and they really are obsessed with WeChat. WeChat has now become the interface to the banking world. So that is the question I'd ask as a banker. How can you help your customers engage, work with them in their real life and for the jobs to be done for them as individuals, rather than trying to design a new digital channel?
Remco, give me your perspectives on this. You guys have got a pretty cool solution as well. What's your view on some of this?
Well, I think that the first question you always need to ask is, if you look at all of these technological solutions, let's say, for example, like artificial intelligence, right, has been the buzzword of the year in 2017. Basically, in every tagline I was reading, I was seeing AI, and it was ranging from big headlines about the Elon Musk apocalypse to save us from the AI, right, to other of these examples. And I think that for banks, it's really important to look at just very simple solutions that FinTechs are able to offer, because FinTechs are leveraging some of these solutions like machine learning in our case in order to understand data and actually contextualize it about customers. And the real value that FinTechs add in this game is that if you look at any of, for example, the Moneyou or the Tijssen, right? You guys are all using specific technology to solve a pain point that the customer is experiencing. To give you a very simple example, also to what you said, Nigel, about the biggest still getting accounts in. If you take a look at the challenger bank like Revolut, Revolut has made it possible in less than 5 swipes to get a full IBAN account in. Now, how easy is that, right? And they use a very simple technology, facial recognition, of course, which you also saw on the Moneyou app. These are all very concrete examples. So I guess that at the end of the day, banks also rely on FinTechs, and they kind of need to coexist next to one another, because I believe that if banks do not step up the game, they will soon lose the war from the tech giants like Amazon. Amazon does one thing really well, and that is leveraging machine learning to understand their customers and make the experience personalized and timely, offering the right products at the right moment.
Yeah, maybe I can respond to that, because I clearly agree. It's not nobody is in need of a banking product, so they don't think about having a mortgage. So it's tapping into these moments. You can sense them when you plot the jobs to be done, and then you get into this ecosystem that's not about a banking journey. It's about an e-commerce journey, or planning for something nice for a holiday, and then you can see what's my moment of truth. And I like your approach, like on the profile very much, but it is very complicated to execute on this. So of course we're putting these moments in lifetime also in our app, and we wanted to give it in the hands of our customers, do it yourself, and then get in this ultimate data flow, like you say, you can anticipate better, but that asks a lot. So we have now a 250 FTE company, and we can sit together to discuss how we can align marketing, how we can align product management, how we can align the customer feedback to put in, how we can align all data flows from your CRM to make it work. If you have this profile, you should also get the feedback back. It should be in your systems. So I think it's very good that banks see it's not about their products. That's the last point. But getting there, like it's been really said easy. Oh, you just do with data and you tap into the customer journey. That is where the hard work comes.
Yeah, that's also what we experience in several of our client projects. It's a very difficult game. I think that the biggest problem right now, the upcoming regulations like GDPR, is causing a hellfire for most people, but also really actually doing this, really real-time interacting with people using data sources is a huge technical challenge. But to give a very simple example about, in my case, like a while ago I was traveling to Tel Aviv. I love Tel Aviv, but the first time I came there, the only bank account I still had was ABN AMRO, and at the time I was already living in Hungary for about 2 years. So that means that I often experience very difficult problems around sending simple transactions to people and having to pay a lot of money for that. But besides that, when you travel to Tel Aviv, you try to use an ATM at the airport. Basically, if you pull my transaction data, you could determine whether I'm at that airport, and that is not much of a technical difficulty. But at that moment, it turned out that my card limits were either set too low, but there was another problem, and that was the international profile was not turned on. So I found myself at the airport alone, and I wanted to get out of there, but I couldn't get any money. So how are you going to solve the situation? Well, if in the case of ABN AMRO, you have to use a card reader, which also takes 2 hours to work. Now, a while ago, I got, again, what I mentioned you, this challenger bank called Revolut. When I traveled to Tel Aviv, Revolut sent me a message saying, Remco, we've detected that you've moved to the Ben Gurion airport. And based on this, here's the nice and the latest exchange rate, so you can exchange some money and you can use it on your card. And this is just a very simple example of how to solve pain points for customers, and it is not even so technically difficult. So I guess that it really comes down to aiming from the low-hanging fruits and not the most difficult projects for banks, but slowly building your way up there. But that's my 2 cents on it.
So I want to talk about the how for a bit. So Jason, one of our co-founders at 11FS, he was a co-founder of Monzo and Starling as well. And Monzo and Starling are widely seen as some of the most successful challenge banks in the UK. I think what's interesting about the likes of Monzo is they've really raised the bar both in terms of customer experience as well as cost-to-income ratio. So most banks can only dream of having a cost-to-income ratio that's less than 20%. Now, how do you take, because to me digital, it's a small team sport. It's special forces versus conventional army. What advice do you give for banks that want to take more of a startup approach, and you guys have done it as well? What's the advice that you give to organizations who really, really struggle to become a bit more innovative?
One of the key things that does handcuff the ability to be agile is what I think the guys at ABN have done. You've got to put a middle layer between your old banking platform, and you'll never change your old banking platform because it's like driving 100 miles an hour, changing the wheels. At the same time, too high risk. TSB are a classic case in that. So putting an enabler layer on your existing platform to give you the agility to launch interesting products to customers. So you can still retain customer-centric, product management-centric, and still keep the safety. Because one thing I think a lot of the FinTech world has sort of forgotten about banking and about consumers is people want to put their money somewhere safe. And they always have. One of our investors is Deputy CEO of HSBC. Immediately there's a world issue or something minor, as HSBC basically assets go right the way up. So play on the safety of banks, and banks, a lot of these banks around here have been around for many, many years, from the 1850s, early 1800s, sorry. That safety is of massive value. Now, the core banking systems are of value, but they're just not agile. So putting a middle there that gives you agility, and then you can start building the agile teams and the marketing teams and the product teams around that and the processes, and then making sure the compliance layer is built into the agile layer, not into the original core banking system, is one of the approaches we say on technology.
Daniel, what do you think? Is it about building from scratch, or is it about adding a new layer to the complex spaghetti of legacy systems that have been built up over 20, 30 years?
Well, I think that the biggest challenge is actually around organization and around incentives. That you see that fantastic new ventures within the bank would typically be shut down because they are so tiny, and it will take like decades and decades, and even maybe for the existing business to decline for that relative upside to be anything that's interesting. And I see that over and over again. So that's one thing. I don't think that typically the big problem. Well, so I would say that getting the incentive structure right. So if you're head of retail, make sure that you encourage those small initiatives and see the potential in them, rather than shut them down because it won't change my bonus for this year or maybe the next year either. Yes. But then I want to say, I definitely encourage partnering and buy off-the-shelf products. There's never been a point in time where there's so many fantastic products. Anything from cloud services to AI products that you just apply in 2 days, and that's why Monzo or Tink could start with 10 or 15 people and build a competitive service. 20 years ago, you need a supercomputer from IBM to do anything similar. And that's not the case anymore. And I think that there's when we work with companies like Klarna, for example, in 10 markets. They would never ask the question, well, maybe I should build this in-house, maybe this is important for me to have. They would just say, I need the best in the world that's available, and if I could buy it, I'll buy it. Whereas they hear the comments from banks like, well, I probably should do this in-house, like, what? There's no upside. And I think that the difference here is that Klarna has a clear vision of where I'm going, and I just want to get there as fast and cheap as possible. Whereas, and I think to get those prioritization and goals right, I think is super important. Otherwise, you get very a scared road to there.
Yeah, I couldn't agree more. We're currently building a new digital SME challenger bank for one of the tier 1 banks in the UK. We're doing the same in Hong Kong. We're doing the same in Asia. We're doing the same in Africa, etc., etc. And I remember the one in the UK. There were 8 big consultancies in the mix: the Great and the Good, the McKinseys, the Accentures, etc., etc. And one of the big consultancies showed up and said, it will take you 2 years to do this, and it will cost you at least 100 million. And the bank said, well, there's a door. Because the approach that a lot of, not just banks, but also the services industry, including consultancies, take to delivering digital transformation is still all about bums on seats. It's not about that small team sport that we spoke about earlier. But, I mean, for you guys, working for, ABN, big organization, Kasbank, big bank here, how did you guys do that within your organizations?
Creating a space that is it's really in the bank, but it's on the edge. So you still have the advantages of the big corporation. You can use their knowledge, their technologies. That has advantages, of course. But also you have to step out sometimes because, of course, banks have to be reliable. And sometimes you are doing things that are not really that reliable or a little bit risky. So you have to get that space from the top. In our managing board, we get the support to do that thing. And if you are not getting that support, then you are not. Then it's not fine to failure. And if you fail, then that's totally fine. Do it fast. That's my tip. But you have to. You need room to make failures, and if that's possible, then it works out.
What about you guys, Menno?
Yeah, so I've worked in several circumstances, also in the innovation lab of ABN AMRO, and now in a venture. I think what works in all models, because there are different choices you can make. You can follow multiple strategies. You can change your strategy over time. That will happen. But what I really love about this situation of Moneyou, it's really a focus on delivery. So we really try to keep the time before we really get actual live data in for a customer as short as possible. And then, of course, test with customers about your concept, but really bringing it to the customer ASAP. And then about the incentive, I see the problem, because if you focus on a certain need or niche, you are vulnerable because it's not huge yet. I think it's also about getting the learning modus in. So also at ABN AMRO, that's a big part of the innovation and the digital transformation program. It's about learning. So there's no ideal model. And also for Moneyou, when I pitch, it sounds like, oh, perfect. But each day, each quarter, we work in a quarterly heartbeat. We see how things should be done better next time. And that frustrates us, but we want to improve this. And I think that's a very important point. So it's not about the outcome directly, but about what could you learn from it and how could you progress.
Yeah, I think.
Just short on that, I think that Moneyou is a great example of getting those prioritization and right. I mean, because should you be a very, very small initiative within the bank, very hard to get that focus and resources and time to make it happen. To put a separate company, that is one of those ways to get inside.
Could I just say, just even learning from the past, in the 1990s, this thing called the internet appeared. And all of us in the capital markets, I was in the capital markets and in the FX world, thought, how do we make use of this? You can see the different banks. Swiss Bank was now called UBS today. How do you capitalize on massive change on technology? So cloud computing massively changed us to allow what we're doing today in the corporate and retail and, say, wealth management world. The arrival of the internet allowed us to do that in the capital markets. So the key thing, that the observations from that time was, is there somebody on the board who's tech savvy and digital savvy? When I say digital savvy, they're not the head of IT. There's somebody who understands the concept that digital is about removing friction and engaging with customer, when technology is just the enabler on that. And then having, to your point about the small teams, is getting the compliance guy, the ops guy, the front office guy, the risk manager, and the IT guy all together and engaged as part of the actual change processes and putting new products out. And then having, again, the platform that allows you to innovate fast. At Swiss Bank, we had an amazing platform where we were able to do something very analog very fast, which was create flip charts we gave to our traders in the Chicago Board of Trade. If it was on this trading service, you sell. If it's on this trading service, you buy. And we just dominated the market then because we had information advantage over everybody else. But simple innovations don't just have to be digital, but digital encompasses analog as well.
True. No, I couldn't agree more. And I think I'm not a big believer in the move fast and break things principle. I'm also not a big believer in failure. But I think if it's all about working towards that minimum lovable product, not necessarily minimum viable product, but what's that minimum lovable product? And how do you work towards that beachhead? And I think your banks really need to move away from seeing digital transformation as a multi-year thing that's going to cost an absolute fortune. I mean, there's much better ways of tackling that. For those of you that were at Money 2020 in the past couple of days, you may have seen Ralph Hamers, CEO of ING, on stage talking about we need to be more open. And I think he said the word open about 20 times in his keynote, at least. What's your view on the need to not just engage with partnerships, but how do you really make those things successful? Because from speaking to a lot of startups as well, it can be really, really fucking frustrating for startups to work with banks and go through a 16-month onboarding procedure and go through procurement, et cetera, et cetera. Give me your perspectives on some of this.
Just both sides of the fence are sat on both the buying and the selling side. It's like everything coming together, two parties. because my observation of the say the younger fintech selling into the banks was you've got to appreciate the compliance guy has to say yes, the risk guy, the ops guy, and there's a process there for good stead because the bank is a haven of safety and they don't want to take that sort of risk on side. So you've got to appreciate both sides. But it is frustrating, but my observation also from the industry over the past 2 years is it's getting better, but it is still highly frustrating, agreed.
Yeah, so what I've experienced is that what works. So I just presented three fintech collaborations. We really co-produced a proposition. But if you evaluate, we're like same sized. We're not big corporates, both, and we're having like equal teams. But also the project was equally important for both of us to really make it happen. And I think that really works. So thinking of corporates saying, well, we do a lot of with fintechs. Is that also the case? Are you really joint partners? Often that's not the case. And I really like the quote of our CEO. She was also on Money 2020 with David in the panel. And she said, well, talking about partnerships, you should be aware not to put yourself in the middle. So if you're talking partnerships, it's like we are doing this together. It's not one corporate who's organizing multiple partnerships around himself.
Any other perspectives, guys?
Well, I think it's going to be absolutely necessary for people to partner. I think that in most other industries, you'll see, I mean, the strangest setup of partnerships, and they've all aligned to just create the best potential or possible product. And banking has been kind of a high switching costs, very few people leave, so competition has been limited, which has allowed people to be universal, then done absolutely everything themselves. There's very, very few industries where that's the case. And I think that as competition increases, then you just need to find the best partnerships. Us working with a lot of banks and fintech companies as well, I think it's been important to, one, have that sense of, I need to care about my customer's customer. That has been important, rather than just selling what the bank wants to hear. I think that the IBMs or the Accentures has been selling nice PowerPoint for so long. And being a small startup, I need to have reference customers. ABN needs to be a reference customer, otherwise I won't get a new one. And how will they be happy? Only if their end customer is happy. So that's one thing. A second one would be to have a good commercial straight line in place, which to me would be not just go in there and think it's like fun to collaborate and do cool stuff together, but this
like a petting zoo.
No, but exactly. And I think that, I've been invited to so many like common pitch competitions, and you'd be part of something, and no, I need a business. That's a big difference.
And I mean, it's a super, super important point, because if you only have 12 weeks, so if I'm, and again, I think you should look at this is not a project. You're building a business. Even if you're starting a small innovation initiative, this is about building a business, not about doing a project. And if you only have 12 weeks to do something, and at the end of 12 weeks, you run out of money, you've got no house, your kids are sleeping on the fucking street, then the approach that you take is very, very different. And I've been involved in a whole bunch of big digital transformation programs as well, where, we have to postpone the go live date by a couple of weeks because of blah, blah, blah. If you do something like what these guys have done, you run out of money. You have no choice. So again, the approach you take is very, very different.
And I would absolutely echo that. And I have a good example that while we work with ABN AMRO, that's a consistent team. They know they need 10 people on their side to run product forever and ever. And with another installation, that was like a 1-year project to get everything up and running. It was awarded Product of the Year within this really large bank, and there was probably 30 people involved. The day after the celebration and the champagne, the entire team was dissolved, and we're like, what's happening? Where are everyone? It's now time to start work, and that was the complete opposite of what they had in mind.
So what's the future of KYC and onboarding? And again, I think if you look at a lot of new players, I think some of you mentioned it early on as well, you can literally have an account up and running in a couple of weeks. And I think there's different levels of fidelity as well in terms of the service that you can provide as an organization. But
Yeah, good question. Because you saw in my pitch, frictionless is important. So the onboarding I highlighted. It is not something you would say that's your killer feature, right? But I think it will become more and more. So we really invested in having this onboarding completely through the mobile as fast as possible. But also, and we did it, of course, together with a couple of very advanced partners, really be agile in this. So we're not dependent on a specific solution within the KYC. So if there is new behavior analytics which could help the onboarding faster, we can just replace a certain module and put the new one in.
I think it's a given. Right? I mean, having a slick KYC onboarding experience is a must. And it's like when you build your new technology stack, it's like building on top of Kubernetes. You put Kafka in place, etc. It's your no regrets. If you fail to get your onboarding process right, and there's still a whole bunch of manual work involved, then just forget about it.
How easy or difficult it is to latch on the various fintech solutions that is now coming in the market?
Two things. Connecting to the legacy is there is 3 or 4 different models that you connect in, and they just take time to test, etc. And if you've got somebody who's got decent RESTful APIs like Starling, it's easy to integrate to legacy, although technically they're not legacy. Say Crédit Mutuel Archaea, it's old 1980s technology, so you're transferring files. But that is a process from anything from 4 weeks up to 3 months in general, from our experience. From once you got a set of decent RESTful, well-designed APIs, and our view of the world is the API is the UX of how to integrate to the bank. So they're not technical-led APIs; they're very much functional, product-led APIs. We had a Czech bank integrate and put in pilot within a week was putting functionality to give certain capabilities for foreign exchange and also sterling accounts in front of customers. So the key thing is being able to get that ability to take that value prop you've thought, like a Czech retail customer might want a sterling account because they travel, so that's a value prop to them and a card that works against that, and then delivering it to them and testing it quickly to get feedback and then actually do a full production that's of use. That's the real speed up you can have if you've got decent APIs and a decent innovation platform on top of your legacy. Legacy, it's just very difficult to do that. Another case in point is we're very close with MasterCard on the MasterCard Start Path program. And they've got, bizarrely enough, they've got a massive innovation consulting business that's probably similar sort of size to Accenture almost these days, but takes a much, much leaner approach. And they do a week sprint to come a new product with their customer, which tends to be the banks. And the ta-da moment of we'd like to see it working isn't there because it's just PowerPoint. And it goes back to almost Accenture again. So we're working with them as well to make sure that the ta-da moment is a working app that does something with real money and real cards for its basic things of issuing an account, issuing an IBAN, receiving, sending money, collecting money, issuing cards as well. Give that so you can actually see stuff working. Once you can see stuff working, that deliver value prop, you can then get real feedback from customer.
I think the short answer is you don't, if I'm perfectly honest. And I think as a bank, in order to develop truly digital intelligent services, so we often talk about digital riches. So how do you build a product or a service that's real-time, intelligent, contextual, human, very important, extendable, and social? And if you build on top of your existing legacy systems, there's no way that you'll be able to achieve that. We posted a really interesting blog on our website on 11fs.com called The Banking Battlefield, which talks about exactly that. So go and check it out if you haven't read it already. But to me, in order to develop those truly intelligent services, there's absolutely no way that you can achieve that by just adding a layer on top of what you've already got. I think you need to do both, because as a bank, you're still a regulated entity. You can't just stop the engine and stop everything that you're doing, because the regulator will tell you, well, you're just going to stop investing in your existing technology stack? Forget about it. But what we're seeing more and more, and the banks that we're building as well all over the world, we're building those from scratch outside of the existing organization on a brand new technology stack. Again, very similar to what the likes of Monzo and others, and some of these guys have done as well. because that doesn't just allow you to provide a much, much better customer experience, but also allows you to really, really significantly reduce your cost-to-income ratio. So from my perspective, as a large bank, you should be doing both. Continue to invest in your existing platform, because you can't just switch it off, and there's still a lot of room to provide a better customer experience and to reduce your cost. But if you really, really want to develop those truly intelligent digital services, you have to build something from scratch. And banks spending 8 billion or 10 billion on digital transformation is bollocks. It's nonsense. If you have to spend 10 million just to keep, or 10 billion rather, just to keep the lights on, there's clearly something wrong with your organization, because you can build a new challenger bank for 20 to 50 million, max.
Regarding the what you said, we talked about partnering. You also mentioned regulation quite shortly. It's mostly a question for W.UP and probably Tink. I'm working on a big data platform, Hadoop based, and what I usually notice with regulations such as GDPR is that with partnering is usually quite hard to work with this, because you have a data interchange and you have to comply both to get it working on both sides. And it's quite hard when you partner to make sure that you are compliant with these kind of things. You know, it's a tough, it's an annoying topic and a tough question, but it's something I have pain with, and I'm curious how you maybe solve this and what your thoughts are on this.
Daniel, you wanna take that one?
Well, I think there's been a lot of buzz recently about the GDPR not allowing AI or machine learning, and I struggle with getting to that conclusion, or we disagree. I think that, or from Tink perspective at least, data has been at the center, at the core of what we've been doing all along. So GDPR wouldn't really change too much. We need to be explicit and upfront with the customer what we intend to do with it, and so must the bank. And I think that we have different relationships. Sometimes we are controller and someone else is processor, but it hasn't been. With the 10+ large bank installations that we have, it hasn't been a showstopper. Happy to elaborate afterwards.
Well, I cannot agree more. Like in our case, GDPR actually opens up new possibilities. Like we said earlier, in the UK alone, now we have 22% of the population who are allowed to share more data if they get better products in return. So in our case, it's just very, it needs to be absolutely 100% clear what the value is. By working together with, let's say, a data platform like ours that allows to get more personal experience when you're banking, it's just 100% about messaging. The bank needs to send out the right message and the consent. And I'm 100% sure the large part of the young majority would be much more willing to give their data or give consent to use it. So I don't necessarily see that as a problem, especially given the fact that by 2021, the amount of digital sales, or now I'm saying people using digital banking solutions, is expected to rise to 53%. And for all of this 52%, it's in their own best effort that these values are clearly communicated. And I think that's what we are supposed to do as the FinTech or as the bank or in any kind of partnership.
Gentlemen, it's been a pleasure. I think we can continue this conversation for many more hours, but lunch is around the corner, I think. Where do people find more about you, Remco?
Well, you can find us in the lobby, so I would say
nice and easy. Nigel?
Go to railsbank.com, register takes you 10 seconds, and you can play with our API sandbox with real money in 15 minutes.
Cool. Onno?
Yeah, for me the same. I'm also at the lobby. So speak to me.
Menno?
Yeah, please test our product, Moneyou.nl or Moneyou.de, Tiki.de. And we're here with a couple of colleagues, so approach us if you want feedback or answers.
Daniel?
Daniel at tink.se.
Nice and easy. I'm Jeff at 11fs.com or at Jeff Tijssen on Twitter. Can I please get a round of applause for our panel today?